Good morning, everybody. It's Friday, August 2nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up $0.0175 at $4.25. November soybeans were up 8.5 at $10.25, and December Chicago wheat was up 3/4 at $5.57.5. This morning, the USDA announced an export sales announcement of 202,000 soybeans to China for 2024. The outside market action here pretty weak this morning on the heels of the jobs report showing really disappointing jobs number for July. 114,000 jobs were added versus 185,000 expected. So a pretty big miss there on the job side. And the unemployment rate rose to 4.3%. It's got stocks down about 340 right now, and the dollar index is taking a pretty good beating. So with that, Dustin, maybe a few thoughts to wrap up the week here. Green on the screen. We got some sales announcements, a weaker dollar, so not out of the realm of possibility to maybe see a little bit of a pop here today.
Yeah, you did, definitely. So, where do buyers and sellers match up when we're losing purchasing power of the dollar? And a lot of people will point, to the dollar index and say, hey, that's been very strong lately compared to history. It's been well above 100. There was times, in the last, couple of decades where we were, down in the 80s. And relative strength of the dollar now compared to other currencies, I think, is not what we're talking about. We're talking about, loss of purchasing power, 25% loss of purchasing power of hard assets in the dollar. You've got gold trading all-time highs here recently. And today, though, we are seeing relative strength against the euro and the yen. The Japanese stock market had a pretty fairly large sell-off here. The dollar's doing well against the euro, especially. So I think that might be part of the overnight strength. This jobs data, I think, is all of that move behind the currency. So, and this is kind of the talk of the day. Maybe this is a jolt for the dollar index in our favor on a relative strength or a relative weakness that also helps, prices stabilize a little bit. It's encouraging. Hopefully that, this will be a little bit of a reprieve from the flat price sell-offs we've had. I don't think even in a weaker dollar, though, that's going to change our opinion on spreads. I think spreads still, dollar denomination is still going to impact those back month contracts as well.
Yeah, we had, well-publicized StoneX released their crop estimates yesterday. They were up about 1.5 bushels in versus the USDA in corn to 182.3. and about 0.5 bushel at 52.6 versus 52 for the USDA on the soybean side. Ben, maybe just a couple thoughts from you this morning.
Yeah, I think the macro stuff is pretty interesting. There's been a really big long-term trade in a lot of commodities, long equities, short grains. And I know they're not all intermingled, but there are some that are. Maybe just the risk off of the poor jobs report, uncertainty about what can happen in the Middle East this weekend, and people want to move to the sidelines for a minute. I think that if we were to put together something price positive due to risk off and maybe the uncertainty heading into the August report, it would be a really great opportunity to get some of your fall needs met if you have not. I think that we have a pretty large crop out there, and we're gonna have to price it for export. And that FSA data that comes out for adjusted acreage, I think, becomes a big number, and I think that we need to see that at least to try to stabilize or sort of soften our downside potential, because if we finish strong, it looks like we're going to have a record crop in corn for sure, and maybe in soybeans. And granted, you still have 2 months before it starts getting harvest, 6 weeks, however you want to look at it, to get started. But we've got to clear a massive crop with a producer who is undersold, and I think it's going to still be difficult to to roost the short out of the market unless there's something outside that maybe has nothing to do with grains that you never see coming. And this has happened before. So, risk off. People like to put things in physical commodities, best described as something you can drop on your foot. But I think that sled is that hill's pretty steep right now for grains.
Jace, final comments. We'll put a bow on the week for the grain side.
Yeah, no, I agree with everything those guys are saying. I got to get through this report. Obviously we saw the private estimates above trendline yield for corn, up there for beans. Somebody made a comment on Twitter. I don't know who it was, but it'll be funny to see when the average trade guess for corn is below trend, and then we can't have any bullish news if it's below what we're trading, right? I think the market's been trading 183 type corn yield here probably for a while. See those surveys come out around that number isn't surprising. So we'll see if the USDA moves it up. I wouldn't expect them to personally, but we'll see. That it'd be nice to see them not touch yield. As far as weather goes, right? Like we're coming into August. We still need some good rains across the majority of the belt to get a really big bean yield. A lot of people have been missing a lot of rains. Obviously, we've gotten a lot of good rains in Iowa and Illinois, but kind of outside of that, there's a lot of areas that probably need some good rain here through August. And if they get it, they're still going to have great yields, right? I mean, we know there's good crops out there, but you need rains in August. So yet to be determined on if we're going to have this really big bean yield or not. I think corn, to Ben's point, right? We know we got a good corn crop. It might be great. To get the great yield, right, you still need to finish the crop through August and September, right? Grain fill is a huge part of that yield. So it's yet to be determined too, right? I mean, we throw out every bearish thing at this market, and maybe it just continues, right? I mean, you can't argue with, hey, it's continued to rain all year. Why wouldn't it finish strong? And I kind of get that, right? That's been the pattern, but it still has to happen. The big outside stuff, I think that is kind of important too, right? Like you're having the stock market pull back here pretty aggressively the last couple of days, bad jobs number. The market kind of fears the Fed is dragging their feet a little bit, and maybe by design, right? The Fed maybe wanted to see a bloated stock market, give that last sign that, we need to start cutting rates before they really were going to do it, right? It was kind of rosy, right, for a while. We started getting some really good inflation numbers that were coming down. The stock market was cranking, so maybe this is a shift of tide, and the Fed can feel a lot more confident in cutting rates, which they need to do anyway, right? We got this huge interest on debt. They want to cut rates as soon as possible so they can refinance and all that kind of stuff too. The market feels so out of whack when you look at the entire economy, in my opinion, right? Bloated stock market. I mean, look at our industry. It's in the tank, well below break even. Dustin makes this point. You got nothing that makes sense. You got high land values, high input costs, way below break even, grain prices. So everything's just kind of out of whack. So a rebalancing to more of a normal, if there's such a thing, kind of market, hopefully we're at the start of that. So,
and we think cuts, like a rate cut starts us down that path, in your opinion?
Yeah, I do. I think we have to. I think the U.S. economy is set up where we need cheap interest rates. So I think the Fed was not going to start doing it until it was clear that they can do it without reigniting an inflationary spike, right? They did not want to see that. So I think this is probably welcome. The Fed would never say that stock market's coming down, but it's probably welcome from them. I don't think it scares them that a 10% pullback in the stock market. Like I said, I think it's one more sign for them to feel confident cutting rates.
Oh, we joked about it yesterday. It's like Buffett says, it's a good buying opportunity for somebody, right?
Right. They act like they're not influenced by the stock market. Everybody knows that's not true. Yeah.
No doubt. Well, Ryan, we had quite a risk off yesterday and a little bit of lower cash trade. Put a bow on the cattle this week for us.
Yeah, for sure. So we did see 187, 188 in the south. So it started off kind of steady, and then some lower trades started to kind of pop up here. Dress 308 to 310 in the north. So overall, just kind of lackluster performance. I think most people were hoping for steady, but you're also kind of butting up against some pretty important dates. We got option expiration today, and it just seemed like there was a decent chunk of liquidation. You got a ton of outside money that's long in the front end of the market that's not going to take delivery. So at this point, I think that they're probably rolling forward. So we were down about 2,700 contracts in open interest. In the live side feeders were actually up. So it's kind of interesting. Perhaps we were seeing a little bit of new selling come out of the feeder market. Cash has been a little bit weaker just on the index side as well. So overall, just kind of feels like we priced in kind of a big move here, a big down in cash, and we're getting the positions moved forward. So overall, it just kind of feels like you kind of traded a lot of the bad news for now. Maybe we could just kind of go limping into the weekend. But as Jason was talking about, we're at near record high prices. If there is going to be some kind of, maybe equilibrium rebalancing, after this kind of rate cut, what does that mean for the cattle market? I think the longer term, there's going to be a lot more fear if stock market keeps on dropping, and we see some of these metrics like unemployment start to rise. If that's going to be the case, I think that overall that's a longer term kind of bearish factor for the meat market. So you may get your wish, Dan. It may take some time to get into retail, but I mean, it could happen.
Yeah,
So
ground beef's got to get cheaper, right?
Yes, it does. So we'll see. Monday's first notice day.
Okay, very good. Well, I'm sure everybody notices, but Brian taking a well-deserved day today. It is Fun Fact Friday, so he has cautiously passed the torch to Ryland.
Yes.
Put a disclaimer here, folks. We have not scrubbed this, so I don't know what we're gonna get here. This
It hasn't been vetted. Uh-oh.
It has not been vetted. No, I didn't get Brian to sign off on this either. So, I mean, I try to keep it in the spirit in which he would probably appreciate it. So hopefully he's watching right now. But, we all know that the corn market's crashing just due to a buttload of old crop corn that's out there. And when I was looking around, apparently buttload is an actual measurement. Didn't know that one. But yeah, butt is an obsolete English measurement of liquid equaling 2 large barrels of wine. So each barrel held about 120 gallons. So, I mean, like, if you kind of think about it, you could do a lot of conversions with that. And I think we should probably bring this one back, just considering, you do some quick math, about one contract on the board of trade, 5,000 bushels would equal approximately 120 buttloads. So,
buttload of corn.
Buttload of corn.
Wow,
Yeah,
so funds are
120
short.
buttloads. Funds are short.
Buttloads.
Couple million buttloads.
Yeah, that's funny.
We
So
need the
there you-
USDA to start giving us export sales in buttloads.
Yeah, I
Yeah.
mean, maybe we should start lobbying the exchange to make some changes to the contract specs here, but I'm all for it. So there you go, guys. That was my fun fact for Friday. So there's going to be a lot of
Market's making us
buttload
all
talk,
crazy.
I think, pretty soon.
Yeah, no, very good, right? You did. That's good stuff. Nick, this is as good as it gets, man.
There you
This
go.
is what I tune in for. Yes, every week and every day.
I hope Nick appreciates it.
Yeah, he's quietly chuckling. I can tell. I need to be short 15 buttloads of corn. Well, Ryland, you've just beat Brian for most comments ever on a Fun Fact Friday.
Yeah, I think everybody needs to go sell a couple buttloads of old crop right now. Just get this thing to bottom. All right. Jeez.
Well, we're just trying to brighten everybody's day. So you did a good job, man. We appreciate everybody tuning in. If you liking the show as much as we do, we have a blast doing it. We hope it provides value to everybody. Give us a like and subscribe. It helps us out, keeps you up to speed on all things AgYield. And, as we put out premium content, it certainly puts you on the forefront of receiving that. So just came into the open here. We'll give you a quick rundown. December corn up 3 1/4, 401.5 is the last. November soybeans up 11 3/4 at 1028.5, and December Chicago wheat's up 2 1/4 at 559. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central. Appreciate everybody tuning in today. Thanks, guys, for the comments. It was a good conversation. Hope everybody has a great weekend, and we look forward to talking to you again on Monday.